Hi, and welcome to CFO Insight TV. The European market for corporate bonds is divided. Investors pour their money into German blue chips, which pay less than ever on their bonds, while they shy away from Europe's cash-strapped periphery. Today, Anthony Bryson, the European head of corporate debt capital markets at BNP Paribas in London, will talk to us about this divided market. Hi, Anthony. Welcome.
Hi there. Thank you for having me.
Volkswagen and Siemens both recently sold bonds at laughable rates, really, really cheap. Is this the golden era of bond issuance for high-grade companies?
I think it definitely is. We've been saying this for a long time, and I actually think it's a fairly obvious observation that core European corporates, and they don't just have to be investment grade. We've seen quite attractive offerings also, meaning for the issuers, attractive low coupons from the crossover space too. No doubt that is a trend which we have seen, which will continue. Volkswagen is a good example. They actually took a 10-year maturity, which for a finance company or for an auto company which is financing this for their financial services arm normally is quite a long maturity.
So how desperate are investors to put their money into assets that they still see as sort of safe?
You know, I think if you speak to the debt syndicate officials now, so the guys running the book on these deals, and they obviously have to balance the demand and obviously the issuer side, we're getting a bit nervous because, of course, investors don't have that much of a choice. There aren't that many new issues being offered in Euroland to investors which will offer features they want to have and deem as safe haven now. I do think this is a trend to stay, and you're absolutely right. For core European credits, I think we will see this favoritism or this favored asset class over some of the other asset classes for a while to come.
When you talk to CFOs, what's their feeling? Are they thrilled by this opportunity to raise cheap money, or are they, are they scared because of the reason that's lying behind this opportunity?
Do you know, if I could take your question, reformulate it, that when we want to have a bit of fun, it's interesting to see what do treasurers think and what do CFOs think. And you won't always get the same opinion at any time always from a company, but especially now you get a good mix of opinions. So typically a finance director will say, look, I core German, Northern European, Dutch, core European credit, investment grade ratings. I'm cash rich. I haven't been going crazy on M&A. I've got good cash flows. I want to defend ratings. There's uncertainty after Lehman. So I've got negative carry. So their problem is negative carry. And if we come with a highly attractive proposition for financing, as do all the other banks, the first answer we typically get is, we're not worried about where to raise money. We're worried about where we put our money, with also counterparty risk. What we've seen, coming back to your question, is certainly some CFOs, which admittedly have got a more of a macro view, will then say, well, hang on, I'm not going to be debt free. I've always got a certain base level of fixed rate or floating rate debt in my portfolio, and if I can get coupons which are historically low right now, I should just go and grab the money. I would put Bertelsmann in that camp. They did as a media company, they did a very successful 10-year offering during the summer. I think it was a fairly wise but also opportunistic decision in the context of such an attractive market.
We've been talking about the countries where issuance is still lively and it's going on at a crazy pace, really. However, the situation is much different in the periphery. What can you say about the situation there?
I think there are some interesting trends. The first thing is that real money insurance and real money buyers, for example, in Germany, but also in France and other areas, they have obviously the inverse problem. They need to get yield somewhere, right? So if we look at, for example, offerings of top-notch Procter & Gamble, Siemens of this world, you buy it because you need it as a core holding, but it's not going to satisfy your normal yield requirement. So what we've seen is a very healthy flow in private placements this year. Mm-hmm. And you would be surprised to see just which companies from the peripheral countries have actually managed to get not only chunky bites of 50, 100 million clips, but also in very long tenors, meeting yield targets of real money investors. Yeah? And I think that is also a healthy trend. It is a diversification trend. So that would be one observation with regard to for example, Spain and Italy. The other observation I would have is and if we then were to formulate a recommendation for CFOs, it would be you've got to grab the money when the window is there. And I think all the corporates are fully aware of this. This is not a new recommendation, but it really is a question of monitoring and grabbing the funding when it's there. Yeah, and nobody's got the glass ball. We do not know when those windows open, but when they do open, you've got to be out.
And then they continue to open occasionally?
We have seen that this year, and I think it will come back. There are volatile events, which everybody can read in the newspaper, but we have seen this theme already last year, that there are windows which open and where investors will put money to work also in these jurisdictions.
Is there anything CFOs in those countries can do to enlarge the window? You know, not just wait there and sit and wait, but actually proactively try to open the window?
I think there's no magic to our business there. All these large companies have got sophisticated investor relations. They've been doing this for a long time. They have been stressing the share of EBITDA, which they have as large companies from outside of the home country, for example. I think that in a communication sense, they are as sophisticated as any other large company. I think that it really is a window-driven market. I really think that is also the job of us bankers to point to those windows, admitting that nobody's got the glass ball.
We're already coming to the end of our interview, and I'm going to ask you 3 questions now, and I would like to ask you to answer, if possible, with a yes and no. Will borrowing costs continue to drop for high-grade CFOs in eurozone core countries?
Yes.
Will the final 4 months of this year see rising bond issuance?
Yes.
And will Mario Draghi step in to save the eurozone?
Yes.
Thank you very much, Anthony, for joining us here.
Thank you very much.
And thank you for watching CFO Insight TV.